Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, January 23rd, 5 o'clock p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend, still a cautious uptrend. We need to clear this most widely watched downtrend line on the S&P 500 and to give us some more confidence that the 200-day moving average is going to be in the rear view mirror. We are over 1% above it now, so definitely a good sign. Also a good sign that after the trees were shaken in the middle of the week last week, that bulls were able to recover and have a great close on Friday and follow that up with a good day today. So let's check the trend gauge over here. Market leaders, bullish. Short term versus the 21-day exponential moving average, bullish. Medium term versus the 50-day, bullish. Long term, still NASDAQ 100 has now cut the deficit versus the 200-day moving average to 1.6%. The last holdout of the indices, that is versus the 200-day moving average. The slopes of the line are still moving lower. The S&P, for instance, still moving lower by 3 points a day. So technically, you could stay above the 200-day and continue to pull back. So we'll need to see that flatten out and turn up also to gain confidence. So what happened today? Tech continues to be strong. Tech carries the S&P 500 to a 6-week closing high. High beta stocks continued to crush low volatility stocks. SPHB up 2.94% today, while SPLV up 0.14%. These are the types of details that we dig into to give us a direction on what's going on in the market, and growth stocks have definitely been acting better over the last 2 weeks. So G6 up 1.85%, S&P up 1.2%, NASDAQ 100 up 2.2%, Dow up 0.76, midcaps and Russell 2000 both up 1.25%, Global Diversified 60/40 up 0.4%, bonds lagged, and emerging markets and international stocks, which have been leading the U.S., lagged the U.S. At least for today. In-house GROTECTION, we continue to add exposure, up on the day 0.77%. Let's dive into the details, starting with the charts, then the tail of the tape, and then our focus list. So here's a chart of the S&P 500. What we do at Revere is we are active managers. We gauge our exposure to the market on how the indexes and leading stocks are acting relative to key moving averages. The green line here is the short-term 21-day exponential moving average. The red line is the medium-term 50-day moving average. The black line is the long-term 200-day moving average. Why is this important? Because all bear markets occur once you break below the black line, the 200-day moving average. This is a list of the last 13 bear markets. And if you're approaching retirement, you cannot afford to get caught in a harsh bear market like this that can really take a massive chunk out of your nest egg. That's why at Revere, our number one job is protecting the downside. Then the returns take care of themselves when the market turns to a more healthy posture. We've got buy rules, sell rules, but most of all, downside protection rules. If you're interested in this approach, reach out to me, Don at revereasset.com, or the phone is 855-REAL-WEALTH. That's 855-732-5932. You can also email my partner, Dan Stewart, and he gets the onboarding process started and can answer any questions you have about all things finance. So reach out to us if you have any questions. So here's the S&P 500. Let's go to the 60-minute chart. We've been showing this a lot lately. After a nice break off the lows and a pullback, things were looking good last Wednesday. Here's this harsh reversal that we had. I commented that we needed to hold this 3880-ish level, and we did on Wednesday, Thursday, Friday. Tested 3,900, held. Nice day Thursday, nice follow up today. We did pull back and test the 4,000 level, but a nice close took us into 4020. at the close. So here you can see we struggled back last Tuesday and Wednesday with this 40.15 level. Popped above it today, back tested it. In fact, as I said, all the way back down to 4,000, but closed above it. So a lot of good signs here for the bulls. What do we want to see now? We want to see a hold of this 200-day moving average. First, we really want to see today's lows hold because they coincide with with that sorry, that 39, the 200-day moving average to the downside. But we preferably want to see what we saw with the afternoon pullback holding that 4,000 level. Let's go to a 5-minute chart here and you can see the action. Here's the strong day with the strong afternoon on Friday, followed through this morning, based for a little bit, broke out higher, made a higher high at 40.39. Here's another shake of the trees, pulled back almost a full percent from the high until we bounced at 4,001 today. Went sideways for a little while. Bears couldn't take it any lower. A little bit of a nice pop, another 0.5% pop into the close for a nice close up 1.19% on the day. That's the S&P 500. Let's take a look at the NASDAQ 100, which has been lagging for a while, but not the last 2 weeks, regaining the leadership position, coming into, as I said, now less than 1.6% away from the 200-day moving average, clearing last week's highs easily. In fact, the lows were closer to last week's highs than the S&P 500 was, where we broke below that. Hold on a second, where we broke below last week's highs quite a bit more. You can see that. Here's last week's highs. Here's how much they were pierced on the S&P, but barely on the NASDAQ, as seems like all the selling has been done in the, for now anyway, in these big cap stocks. Netflix followed through on a good day after reporting earnings last week. We've got more earnings on the horizon over the next 2 weeks, but so far so good for the bulls on this move higher. Let's go to the Dow Jones Industrial Average here. Reclaimed its 21 and its 50-day moving average, relative, still lagging on a relative basis in a major way. Mid caps, MDY, continue to show strength near their highs of last week, and small caps, IWM, still not above their highs of last week, but 2 nice up days also, bouncing off the 200 and the confluence with the 21 and the 50-day moving average. So all good stuff there. Continued improvement. The stochastic hookup on all 5 of the indexes went from negative late last week, or the middle of last week, to neutral on Friday, and now to positive today. So certainly some good stuff there. Let's take a look at a few more indexes, and let's start with the VIX. We've got to have a big volatility event and the market's going to fall, I keep reading on Twitter. Well, it's not happening yet. And as long as we stay below this declining 21-day and 50-day moving average, it's not happening. We break back above there, we'll deal with it then, but we're not going to make moves based on fear or trepidation. Here's the dollar. Inside day today, very tight range at this dollar for the last 6 straight sessions here, all around this 27.50 level. So this looking like a false breakdown as of now, but at least we got to start getting back above the purple line, the short-term ADMA. And if we see the dollar go higher, that might put a little bit of a dent in stocks. But dollar not really doing much today. And in fact, it was, let's take a look at the 5-minute chart here. It started off strong and stocks did too. And it pulled back, it got stronger, stocks just ignored it. This area here was where it was getting stronger and the market pulled back, but all in all, not as dollar dependent today as we have seen in the recent past. Let's go to the equal weight indexes, which outperformed their big cap tech weighted indexes for a while. Look at this nice cup and handle now the RSP is coming up to, but you can see on a relative basis starting to lag very subtly over the last 2 weeks versus the S&P 500. QQEW This is the equal weighted NASDAQ 100 above the 200-day, which the QQQ has not. And also, so even equal weight tech is outperforming the S&P 500, up 2.3% today, while basically in line with the QQQ today. And that's because semiconductors are acting extremely well. They're a big weight in the NASDAQ 100. And we'll take a look at that chart later. Let's go to bonds. First of all, here's the TLT. Pulling back for 3 straight days now, stuck between this pinching 200-day and 50-day moving average. Let's take a look at junk bonds, JNK, down slightly today, so sitting on the 200-day moving average. Corporate bonds, LQD, pulled back again for the 3rd day, and the broad bond index, BND, pulled back again. So, if price is pulling back, that means rates are going slightly higher, and they did. The 10-year note up today. So holding its 200-day moving average, 3rd day up, and the 30-year TYX, also its 3rd day up, reclaiming the 21-day moving average. Note that the stochastic has hooked up from oversold. That's on the rate. So possibly gathering some tailwinds for rates to go higher. That should hurt stocks, but the correlations haven't been as solid lately as they had been prior in 2022. Let's see how gold and gold stocks did today versus the dollar. They were very weak early. If you look at the 5-minute chart, see the gap down on gold, but man, it just gathered itself all throughout the day, closed near highs of the day. Good stuff there. So bouncing off of its ADMA, which has contained most of this uptrend, a couple of touches of the 21, but GLD gathering strength into the close. How about gold stocks, GDX? Inside day today, another one that gapped down, but gathered strength throughout the day. Also really weak here in the morning after the close, but big move up here, pull back, close at the high of the day, right in line with the close on Friday. Good stuff there. Now let's go finally to silver, which led for a while, lagging lately, really lagged today, down 2%, bounced at the 50-day moving average, first touch of the 50-day moving average going back to late October. Everything's entitled to pull back. There has been, you can't really call it selling, and well, you can, but ETFs are created and destroyed as needed. So if people wanted to sell them, that's fine, but it doesn't have as much weight as it does as if it was a stock where there's a finite float out there. So that's silver. Let's go finally to Bitcoin. Another good day of Bitcoin above its BITO, above its 200-day moving average now. So those are the other major indexes. Let's go now to the tail of the tape. Stochastics, as I mentioned, turned positive. VIX, not much movement today. Fear and greed up to a 65, leaning more toward the bull case, obviously now with the continued strength. But as we could see last Wednesday, that strength can become undone with just one negative comment, frankly, of the Fed. But they're actually in a quiet period now, leading into next Wednesday's FOMC decision. So we won't hear any Fed talk. But what we will continue to hear is the Fed mouthpiece, Nick the Greek, at the Wall Street Journal. Apparently, if anything wants to get leaked, it's leaked through him. And he wrote an article over the weekend that the Fed is going to seriously discuss slowing of rate rises. Not that that's really news, but anytime it's, that's just what the media has been putting out lately. And I would expect that, there still have been some Fed hawkishness in some of the speeches that they did last week, but for right now, the move towards slowing based on the economic data is what is winning out. That narrative is winning out anyway. Day count from 1 up to 2 up. We've been above the 8 and the 21 for 2 days now. Expectations positive today if we could get above this 39.79 to 39.84 level. This is where we broke down last Wednesday. I took a close look at here at this. This is the level here, basically 39.84 ish. We pulled back, we tried to bounce there, but when we broke below here, this is what accelerated the sell-off last Wednesday, and we stopped short of that on our move up on Friday. So I wanted to see us break above that level, and we did it very quickly this morning, as you can see right here before we even hit 10 o'clock. So I was using that as a pivot. Once that was passed, we got more bullish, added some more positions, and we'll go over those in a moment. Levels. Here's that pivot that I had highlighted there, also above the 4,007 to 4,015 level and 39.99. Those are two key fib levels down below that we needed to get across. We got above them intraday, but what I really like is how we pulled back and then reclaimed them later in the day. This 4,007, definitely a big area. That's the 61.8% retrace of the third leg down that we had in 2022. 39.99 is the 38.2 retrace of the entire 2022 bear market. So those are major fib levels. We want to stay above those on any pullback, but certainly in worst case, the 200-day moving average. There are the ranges on the day. Dollar up mildly. Semiconductors really strong. TAN strong. Cloud stocks, a lot of junk is starting to move higher, and retail up today. Biotech started the day very weak, gathered some strength during the day, but still weaker than the indexes today. I did not get to update this, but this needs to go. GNX, gold and silver, ended up positive on the day, but lagged. It was only SLV that actually finished down, and PIC actually got back to neutral, but again, lagging relative strength today, but not a lot of stuff down. What was 11 out of 11 sectors up. The laggards were again defensive sectors: XLP, staples, XLU, utilities, XLV, healthcare, XLRE, real estate, XLB, basic materials, CKNY, the tech heavy sectors within the S&P led. Those are the biggest allocations within the S&P, and when they're doing well, the S&P is going to do well. So here is our focus list. We'll go through all of that, but first let's talk about the buys and sells that we did in-house. First of all, AEHR, one of the strongest stocks out there, but it got 4 ATR extended from the 21-day moving average today. It's 30% above its 21-day exponential moving average. We took our profit on this today, up 20%. And when it's up 20% in 2 days, you're aching for a pullback. It's a leader. We'll be looking to get into it at a more reasonable entry point, but very clearly a strong leader. Let's see what else. First Solar was a buy today. This made it into the 21.21 on its pullback and bounce at the 21-day. Started out the day weak, going sideways while other solar stocks were strong. Had an alert set at 170. We busted above there. We took a position and then added to it. Very nice run here. Pullback. Closed very near the top of the range. So we did 2% buys on First Solar today. So we've got a 4% First Solar position. And we sold the AEHR TNA when small caps, when we started to pull back. So here's the daily chart on IWM. When we started to pull back on the 5-minute and the stochastic got oversold, just waiting for it to come off of oversold back up. This is where we bought 1.5% in TNA. That's a 3x small cap today. So that was the trigger for our entry. Very low risk. This should hold 180. So only less than 4% to the downside on IWM. And that's it from a perspective of what we bought and sold today out of AEHR, still holding. I'll show all of these, but until we get to the bottom line. So our exposure came in at 0.62. We're going out at 0.72. So 72% of the risk of the S&P 500. Continued tech strength carries the S&P to a 6-week closing high. That's the bottom line. Looking at 4,100 overhead as the next resistance area. That's where we reversed twice over the last couple of weeks. So let's get into the focus list here. Start off with what we continue to own in-house. XBI, putting in a little handle here, lagged today, but it's got that same stochastic signature. And biotechs aren't always in sync with what's going on in the overall market. Our Schlumberger buy still underwater, but it bounced right where it needed to off the 21-day today. Volume dried up as we went through the day, but there was some selling in the morning. Let's see, JP Morgan is finally moving in the right direction. Uh, this was the most powerful of the banks on this day when they first reported earnings when we bought it. But since then, Citigroup has really taken the leadership reign. Come on, Market Smith. Okay, there's Citigroup. So you can see really showing much more strength than JP Morgan and Morgan Stanley the day after earnings. JP Morgan came out on a Friday. This gapped up on a Monday, had a harsh 2-day pullback, but bounced at the ADMA. These two are outperforming. JP Morgan, if it continues to lag, it'll be shown the door. We need to reallocate that capital into something that's acting a little bit better. And then we added First Solar today. So let's take a look at some former broken stocks. They were leaders, they broke, they're trying to make a comeback here. Pinterest is one of them. If you look at a weekly chart, you can see how this was a high-flying leader, dropped from 80 down to 20. Now putting in the bottoming base, and this is looking like a Weinstein stage 1 buy as it's coming, or stage 2 accumulation as it's coming off the lows. Stage 1 is you put it in the bottom, stage 2 is when it starts to come off the bottom. So Pinterest here pulled back early, bounced at the 21, trying to get above this 26 and change area. Very similar action to Etsy. You can see it going sideways. Etsy a little bit stronger, forming this base, pull back to the 21. Nice move off the 21 today. Very similar is also Shop, former leader, harsh pullback, putting in a bottoming base. Shop was upgraded today. This looks awful on the chart, but if you this overhead resistance is over 9 months old now, and we're back above the 200-day moving average. And these types of stocks are coming back into vogue, and we're not going to ignore that. Bros, another broken down stock that not as bad if you look at a weekly chart as some of the ones that I just mentioned, but still very choppy with various news events. Up into the 200-day in reverse today. We've got an alert at the 200-day. Apparently there was a big conference last week, and this came away as one of the big winners from this conference. So we're looking on followed up strength from Bros. Tesla. Everybody whipping on Tesla for such a long time. 100 now, 44% off of the low. This 102 where it put in a bottom 3 weeks ago. When this moves, it moves quick. Back above the 21, coming into the declining 50-day. Momentum really taking over on Tesla. Let's take a look at Apple, another leader. Need it to work if the indexes are going to work. Started out strong today, faded a little bit. But Apple above the 21 and above the 50 coming into the 200-day now. Here's a follow-up on Netflix from the gap up on earnings last week. Follow through day 2 higher high, still on above average volume. Money flowing into Netflix. Now semiconductors, AMD got a big upgrade. This has been a laggard for a long time. Big upgrade pre-market up 9% today. Above average volume coming into the declining 200-day moving average, but NVIDIA is acting way better. You can see it up 7.6% today after this nice pullback last week. This 2-day pullback after some renewed strength, really powering through. And look at the relative strength on NVIDIA. If semiconductors, let's go to the two big ETFs. SMH, you can see above these prior highs from back in November and December, which the Qs hasn't accomplished yet. And also SOX. These are the two big ETFs above 400 here. Again, relative strength. If semiconductors and FANG stocks are acting well, the NASDAQ is going to continue to rock. Absolutely. And then one on the downside today. This doesn't happen a lot. When you've got a fundamentally strong stock with a nice chart pattern, clear leader from a fundamental and technical perspective that just gets hammered out of the blue, down 29%. CPRX, because another drug company said that they are going to start marketing a generic version of their drug. And when a generic version's available, that's what the insurance companies are going to insist you take. And that's why CPRX was down 29% today on 642% average volume. That's going to wrap it. As always, love to hear from you. Email is don@revereasset.com. Remember, folks, it's not how much you make in the market, it's how much you can keep. The tide has changed twice over the last 4 sessions. We went from a harsh pullback last Wednesday, followed through to the downside on Thursday, and now 2 big up days reclaiming all those losses. Market continues to be difficult, but leaders are acting well, and if the market has leadership, it can go higher. You can argue that this is a little cup and handle that we broke out with. It's not long enough technically by the true definition, but that's what today looks like. So today's lows become critical. Last week's lows even more critical, or all bets are off if we would break below last Thursday's lows, as that would violate all the key moving averages and get us back into this choppy base that we set in December. So that's it. Wrapping up Monday, January 23rd. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.